Hey everyone, we got some great news today for Nikola stock investors as the company gave investors an optimistic update for its first quarter of 2024. So let's get right into it. I'll highlight what this latest update could mean for Nikola stock investors. I'll also update my Nikola stock recommendation coming into this update. I did not have Nikola stock rated as a buy. I told investors not to buy Nikola stock for the last, several years now. So you're going to want to tune in to see if I'm changing that recommendation based on this great news that we got today. So let's jump right into it. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so the news we got today on Nikola is here. It was a productive Q1 for Nikola Corporation. The company said that it produced 43 hydrogen trucks and wholesaled 40 hydrogen trucks, fuel cell electric vehicles. So not only did it produce 43, but it sold 40. So that's been great. The company has way too much inventory, but those are battery electric trucks. It still needs to update the battery in those trucks. It's got a current recall, which we'll talk about a little later. But the fact that it sold 40 of the 43 that it produced is great news because it means it's not sitting in inventory, eating up very vital cash for this company that's short on cash right now. So this was a great quarter for production and wholesale. Now, the company also updated on that recall, saying that they're on track for 2020 for a successful 2024. It's more than just setting goals, it's about following through on their commitments. It's not only about production and sale of the hydrogen fuel cell trucks, but also the start of the returns of their battery electric trucks to customers. Those are the ones under recall. The company has to return those to customers. And then after they return those to customers, they've got to update the trucks in inventory so that they could then start to consider selling those. And that's going to bring in more much needed cash for the company. It stopped producing the battery electric trucks. Right now, it's only going to produce those that it has customers' orders for. And so it's not going to spend money on inventory. It's only going to produce when it has a customer order for battery electric trucks. So a step in the right direction here for Nikola, and the stock price was up as much as 10%. Right now, as of this recording, it's up around 7% following this update. Still, investors need to remember that Nikola is not out of the woods just yet. If you look at its latest quarter, which ended December 31st, the company produced 42 trucks and shipped 35. That was down significantly from the same quarter the prior year in terms of production, but they needed to do that because there was a big gap between production and delivery. They were producing these trucks that didn't have buyers, and so they needed to store them in inventory, and that was eating up valuable cash. But at this lower scale, the company is not sustainable. It's losing a lot of money. Let me share with you just how much. The gross profit loss was $38.2 million. On the bottom line, the net loss was $153 million in the most recently completed quarter. And that was an improvement from a loss of $222 million in the same quarter the prior year. In addition to that, the company's diluting shareholders significantly. So when a company is losing this much money, that money has to come from somewhere. It's either coming from shareholders or lenders. For Nikola, it's coming from shareholders, investors like yourself that are giving the company money. That's where it's losing the money from. It's coming from investors and going out the door. The weighted average shares outstanding more than doubled from 487 million up to nearly 1.1 billion shares outstanding. This means if or when the company does ever become profitable, those profits are going to be split among more shares. So the earnings per share is going to be lower because it now has more shares outstanding. And the more shares that it creates, the less potential for earnings per share when or if it does become profitable. Remember last year, the company went through a battle trying to earn the right to sell more shares because it already maxed out. And then it got the approval to sell more shares. And so that's what it's in the process of doing, selling more shares to raise more capital. It's going to continue doing this for at least another year or two before it can become sustainable on its own, self-sustaining, and operate the business without needing to sell additional shares to raise more capital. So more quarters like this one could help the company move in that direction by producing and selling these simultaneously, not keeping them in inventory. And then, of course, fixing the BEV issues so that it can start to sell those that it has in inventory, because that will bring in significant cash for the company to get rid of those that it has in inventory. So a step in the right direction for this deeply troubled company is very good news for Nikola stock investors. The stock is now trading at a forward price to sales of 2.53. That's down meaningfully from the high of around 15 in the last year. But if I go back further, the valuation is down even more for Nikola. It used to trade at a forward price to sales of 120. It used to be one of those popular EV stocks that got, there was a frenzy for EV stocks and anything related to alternative energy, zero emissions energy vehicles. Nikola was one of those that gained significant popularity and following. The stock price soared to unsustainable levels. It's now come back down to reality and trading at lower valuations. But still, just because the stock price is down from where it was before, that doesn't make it a bargain, right? As I've been arguing, that stock price should have never been as high as it was before. It should have never gotten to those levels. The whole reason it got to those levels is because of that frenzy for anything zero emissions, anything electric vehicle in 2020 and 2021. And then starting in 2022, those enthusiasms, those boom times started to come back down as it became reality that these companies are going to have a hard time generating profitability, generating cash flow. Even though maybe the story might sound great, the time it takes to get to profitability, the riskiness, all of that was a little bit too much, and investors started to see reality and the valuation started to come back down. So to update my recommendation for Nikola stock, remember I said coming into this update, I did not have it rated as a buy. I did not have it rated as a buy. And after this update, while it is great news, and while I acknowledge it's moving in the right direction, it wasn't enough to sway an increase in the recommendation. So I'm keeping the stock rated as a hold and not a buy, and I'm updating that today on April 4th, 2024. And so I'm happy to see the company moving in the right direction. I still need to see a lot more from Nikola, from progress in returning those battery electric trucks in recall and then selling those ones in existing inventory and then gaining more traction on the hydrogen trucks as well. So I need to see a lot more from Nikola before I can recommend this stock as a buy. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button and I'll see you again soon.